Salute to all the trading enthusiasts out there. It's time for a big deposit boost with the help of a smart robot assistant. You can pick up this tool right now, for free. Link below the video. But hurry up, because in a month you can get the bot called FixProfit only for a fee. Guys, subscribe and click on the bell so you don't miss out on new useful videos and offers. Put likes and comments. And right now I'm going to do some deals. I'll be entering the market for amounts ranging from $900 to $1,200, and when I'm done I'll summarize the profits. So, active buying. That's the first signal from artificial intelligence today. I will enter each trade according to the recommendations from the robot. Time frame 1 minute, currency pair euro, dollar. Let's go. By the way, besides the free bot at the link in the description, you will also get access to my exclusive chat with forecasts. But that's not all. You will also get a cool promo code. A promo code for plus 100% to your deposit. So, for example, if you deposit $50 you will get $50 bonus on top of that. Or, for example, if you deposit $300 then on deposit you will have $600. Promo code works on the first deposit. Before we dive into the cutting-edge world of ESG-based strategies for trading currency pairs, let's first talk about something crucial: money management. It's the secret sauce that separates profitable traders from those who burn through their accounts faster than you can say market crash. When you trade, especially in volatile markets, it's not just about your strategy, it's about how much of your capital you put at risk in each trade. This is where the 1 to 2% rule comes into play. This rule means that no matter how confident you are about a trade, you should never risk more than 1 to 2% of your trading account on a single position. Why? Because it acts as a buffer, a safety net that allows you to weather losses without blowing up your account. Imagine you're riding a bicycle on a tightrope. If you fall, your balance will determine how far you can recover. Similarly, with the 1 to 2% rule, you allow yourself to recover from the inevitable losses without facing ruin. Now, think of your trading capital as your own personal empire. It's the foundation of everything you do in the market. And just like any empire, it's best to protect your wealth before you conquer the world. So, before you jump into complex trading strategies like those utilizing ESG factors, master money management. A great strategy won't help you if you don't know how to manage your capital. So, what exactly are ESG factors, and why should they matter in the world of options trading, specifically with currency pairs? ESG stands for environmental, social, and governance. This framework is usually applied to investing in stocks, but it's becoming increasingly relevant for all forms of trading. Environmental. This refers to how companies and countries address their impact on the planet. Think about carbon emissions, energy efficiency, and climate change policies. Social. This covers human rights, labor standards, and how a company or government affects the communities it operates in. Issues like equality, workers' rights, and societal development are at the forefront here. Governance. This pertains to the leadership structure, corporate ethics, and transparency in decision-making. How accountable are the organizations you're trading in? What's their track record on corruption, shareholder rights, and executive compensation? Now, you might be thinking, wait, ESG is about companies, not currencies, right? Well, not exactly. Let me tell you why ESG can be integrated into currency trading strategies. When trading currency pairs, you're not just exchanging one currency for another, you're betting on the economic health and policies of a nation. And ESG factors are a huge influence on the economic landscape. The environmental factor. For example, consider a country that's heavily dependent on fossil fuels. If global markets are turning towards cleaner, renewable energy sources as they are, this country's economy could face long-term risks. Their currency might face depreciation if they're perceived as outdated in terms of environmental policies. On the flip side, countries leading in green tech, sustainable energy, and climate change initiatives often enjoy greater economic stability and positive investor sentiment, which could push their currencies higher. For instance, Norway, a country renowned for its commitment to sustainable development and eco-friendly practices, has a stable currency. Their environmental policies contribute to long-term economic health, making its currency an appealing choice for ESG-conscious traders. Friends, take part in our big contest with a prize of $1,000 for one random comment. The conditions are simple. Watch this video in its entirety, give it a like, subscribe to the channel and write one comment on the topic of trading under this video. I will choose 2 winners using randomizer and publish the results in my Telegram channel, where our team also shares knowledge about trading and helps traders to learn. The link is in the description. Subscribe. The contest is held every week. By the way, I would like to draw your attention to the fact that the periodicity of data update in the robot is 1 minute. This is convenient, because you can update the information right at work, while trading on longer timeframes. FixProfit is a super tool with which you will really start to earn. Profitability of its signals on average 80%. Look at the channel with reviews, how much people earn, the link in the description. A country with poor labor standards, a lack of human rights protections, or high levels of social unrest can face negative economic consequences. Investors are risk-averse, and social instability is one of the biggest threats to the stability of a nation's economy. Currencies of countries experiencing social unrest, think of places with high unemployment, corruption, and civil unrest, are often more volatile. By analyzing the social stability of a nation, traders can better predict currency movements. A positive outlook on social stability can be a green flag, while social turmoil often signals a red flag. In the meantime, I profited again thanks to correct predictions from artificial intelligence. The deposit turbo boost was successful, 5 trades in plus. But now I want to maximize profits. I will do something that goes beyond money management, because I can afford it. I do it for you, to demonstrate the true power of FixProfit. I'm going into a $6,000 trade, and then I'm going into another one, doubling the investment amount. Lastly, governance is the pillar of a country's trustworthiness. A country with poor governance might have opaque legal systems, weak enforcement of laws, or widespread corruption. In contrast, nations with strong governance frameworks tend to attract investment, leading to stable currency performance. Let's take Switzerland as an example. Known for its strong governance, legal transparency, and robust institutions, it has a currency that investors trust. The Swiss franc CHF is considered one of the safest currencies in the world. Why? Because of the country's commitment to excellent governance and stability. So, in a nutshell, currencies are influenced by the same ESG factors that affect stock prices. A strong ESG profile often means a strong economy, which translates to currency appreciation. On the other hand, weak ESG factors can cause a currency to devalue. Now that we know how ESG factors can influence currencies, how can we leverage this in our trading strategies? To start, you'll want to research the economic health of the countries behind the currency pairs you're trading. Use ESG ratings from agencies like MSCI, Sustainalytics, and FTSE Russell to determine which nations are leading the way in sustainable practices. If you're looking at a currency pair like USD, GBP, for example, dig into the United States and the United Kingdom's ESG scores. Countries with higher ESG ratings are likely to have stronger, more resilient currencies. Conversely, a country with poor environmental or social policies might see its currency decline over time. Stay tuned into ESG news. Political, environmental, or social events can create massive shifts in currency markets. For example, an announcement of stricter environmental regulations in a leading industrial nation could cause its currency to weaken, while a positive change in social policies like healthcare reforms or labor rights could boost the currency's value. Combine ESG research with technical analysis. While ESG data provides you with the macroeconomic picture, technical analysis helps you pinpoint entry and exit points. In the meantime, guys, I have completed my work. The result is in front of you. In 7 transactions, thanks to a powerful bot, I earned $20,195. It's not fantastic, it's real. Take the bot and subscribe.